Economists warned the Reserve Bank to go easy on interest rate rises as we don't need a recession. Tomorrow, the Reserve Bank of Australia is going to tell the country whether it's going to inflict the sixth consecutive rate rise to borrowers to quell inflation. Today, we're going to cover what the Reserve Bank is going to do in tomorrow's meeting. We'll talk about how much higher these interest rates are actually going to go and what other central banks around the world are doing. Now, some pundits have already pointed out that these interest rate rises are blunt instruments and are actually slow acting. We've talked about that lag period where there's a 3-month period for the banks to recast their repayments, give notice to borrowers, and then for borrowers actually to be affected by these rate rises. So we've seen 6 rate rises in as many months, and a lot of these haven't actually affected the bottom lines of borrowers yet. And the concerns are that the over-enthusiasm of the Reserve Bank with these rises is actually going to cause more damage than good and potentially plunge the economy into a recession. Now, we saw earlier in the month the Reserve Bank governor state in his speech for the parliamentary committee that the Reserve Bank expected that there would be further increases where required to bring inflation back into target range. Now, the target range is between 2 and 3%. That's set out by the Reserve Bank. Currently, we're at 6.1%. We're waiting for September's data to show us and give us an understanding of where we're currently at. But until inflation is back in that target range, the Reserve Bank governor has been very clear in that rates will keep rising. So what is the Reserve Bank going to do in tomorrow's meeting? Well, in a Q&A, the Reserve Bank governor said he mentioned that the board is expected and considering whether it's going to increase by 25 basis points or 0.5%. So it's a guarantee that rates are going to go up in October's meeting. The question is it going to be 0.25% or 0.5% increase? The governor himself has confirmed that it's definitely going to happen, and it's just whether or not they go for a double whammy or a single hit. Now, it is widely expected. A number of economists are saying that the Reserve Bank is actually going to increase rates by 0.5%, which would bring the official cash rate up to 2.85%. This would make it its 6th increase in the last 6 months, which we started from a base of 0.1%. The official cash rate was at 0.1% in May of this year. If it goes up by 0.5%, we're at 2.85%. Now, while the Reserve Bank has indicated that it's looking to slow down the size of its rate increases and hikes in the months to come, with the incoming data that we see here, October is unlikely to be the meeting that it actually takes the foot off the accelerator. If the Reserve Bank governor pulls the trigger with yet another 0.5% increase, this would see the cash rate at the highest level we've ever seen in the last 9.5 years. This would bring the average owner-occupied mortgage rate above 5.5%. And we talked about it before, but borrowers also need to be aware of that 2 to 3 month lag between when the Reserve Bank hikes rates and when that extra money comes out of the bank account. How much higher are these interest rates going to go? Well, we've got predictions from the big 4 banks. Commonwealth Bank actually is saying in October's meeting, they're only expecting the cash rate to go up by 0.25% or 0.25%. And they estimate that the cash rate will peak at 2.85% in November of this year, followed by 2 rate cuts in August and November of 2023. So the most conservative had the lowest expectation of where the cash rate would go. Westpac on the opposite end, they're saying that the cash rate will peak at 3.6%. They're expecting a 0.5% increase for October. Same with NAB and ANZ, they're all saying a 0.5% increase for tomorrow. And Westpac actually predicting that there will be 4 rate cuts next year, or starting in 2024, I should say, of 0.25%. So they're saying that rates will peak at 3.6%. They're saying that will peak in February of 2023 and then start coming back down in 2024. NAB hasn't really said that they expect rates or when rates will come back down. ANZ, they've said that they expect 2 rate cuts in 2024. So we can see a bit of a varied sort of estimate of where cash rate might land. Combank on the low end at 2.85, Westpac on the high end of 3.6, NAB is saying 3.1, ANZ 3.35 is where they expect the official cash rate to peak and then potentially start to come down. Now, if we do see the official cash rate increase by 0.5% tomorrow, this will increase the average mortgage by $753 per month. since the rate hikes happened in May. So in the last 6 months, mortgage holders holding an average mortgage of $500,000 over a 25-year term have seen an increase of $753 or 33% since the rate hike started in May. We can see here with a mortgage repayment calculator, previously you would have been paying $2,243 for the same mortgage is now $2,996 if there is a rate rise of 0.5% come tomorrow. If you have a $750,000 mortgage, the same loan, same details, once again, you're going to see that your mortgage repayments have increased by $1,100 for the last 6 months, and $1 million loan, you see a $1,500 increase. Now, whilst mortgages or mortgage rates might seem low, we know that over the last sort of 30 years since 1990, between 1990 and 2020, mortgage rates averaged about 6.6%. We also need to remember that mortgages at a record levels. Household debt is at the highest rate that it's been ever. So these rate rises are magnified. They have a higher effect on mortgage holders simply by the fact that people have larger mortgages due to property prices increasing. Now, the risk for policymakers and central banks around the world is that they have to be careful with how high interest rates go, because they're teetering between putting the country in a recession, which they potentially don't want to do, and having inflation get out of control. Now, Dr. Oliver, who's AMP's chief economist, has joined CBA in predicting that the cash rate will only increase by 0.25% in tomorrow's meeting. And he said that the risk the Reserve Bank has is that they're seeing other central banks being a little bit more hawkish, and he thinks that potentially the Australian Reserve Bank need to go along with it, because if they don't, they risk the Australian dollar crashing and potentially putting us in a financial crisis. Now, looking at what other central banks have done, we know the US Fed was widely expected to increase the cash rate by 1% in last month's meeting. They only increased by 0.75%. So we can see there the US has slightly slowed down the pace of rate hikes, or the expectation of rate hikes, and the Reserve Bank might follow suit. The other problem that Australia has is our inflationary pressures aren't the same as what we see in the UK and Europe. In the UK and Europe, they're sitting at 9 to 10% inflation-wise. Australia sitting at 6.1 right now based on the data we have. We only get it every 3 months, so we're waiting for September's quarter. And wage growth is about 2.6% in Australia. In the US, it's currently at 6%. What do you think the Reserve Bank's going to do tomorrow? Leave a comment below. We'd love to hear about your thoughts. And here at Hunter Galloway, we're mortgage brokers. We're based in Australia. If you're looking to refinance, buy your first home, upgrade, downgrade, or even get an investment property, that's where we can help. There's no cost for our service. We deal with people Australia-wide. So hit us up at huntergalloway.com.au. Hit that get a free assessment button, and we'd love to have a chat, or call us on 1300 088 065, and we'll see you next time.